From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of today's video, the S&P 500 Futures, the Augie Options Expiration, and ES 2200 No-Show. Now, before I start that, I got to say, I want to remind everybody that these are not our father's markets. And they are never going to go back to any semblance of what they used to be. Pre-87 crash, pre-tech bubble, flash crash, you name it, never going back to anything like it used to. They're constantly evolving. The high of the day in the S&P came in at 2181 half early. The low came in at 2172 half at 9 o'clock Central Time. And last, we're 2180 even. We're down 3 handles on the day. In fact, we're creeping up to the highs just as we're speaking right now. Total volume, we've got 1.1 million minis traded. It's pretty good volume considering a Friday and with everybody taking time off. And the MIMS started out showing 250 million to buy, leaped up to 375 million to buy, and is currently 411 million to buy. That figures. The guys with the better seats are taking advantage of the late day stuff going on here. Now, next week we have a higher number of economic reports. We have 18 in total, and we have 10 T-bill or T-bond auctions or announcements. I don't think that matters too much. Then we have, we have Janet Yellen speaks at 10 o'clock a.m. Friday at the Kansas City Fed Monetary Policy Symposium in Jackson Hole. Whoosh, I got that. Now, and there's some big economic reports coming out next week. But anyway, Goldman came out today, their prime brokerage group reported that there was a surge in net long exposure to 63%, approaching the highest level in 12 months and up from 50% in the second quarter. Now, I'm not going to make any excuses about this. The S&P didn't get to the S&P 2200. They didn't squeeze out the 2200 calls, but who knows? It's not over, And what I want to talk about a little bit is how everybody got real bearish the last couple of days. And really, there's really no reason to really get bearish, I don't think. Is the S&P setting up for a pullback? Sure, it could. But when you look at it, we rallied 212 handles off that 1981 low. And then what? We're 2080 and a half. And we've got a 2180 half. And then we've got a 2193 and a half, 93.75 high. So what is that? That's 12, 13 handles away. That's less than 0.5%. So it's hard for me to get bearish and move off of the idea that anything has changed structurally. If there was some big news out there, if something big was going on, real negative, China was falling apart, you had to worry about this stuff, the S&P was on its high, or something really negative in Europe, maybe the S&P would pull back or sell off a little bit. But again, I think the lessons have been learned here that you're not supposed to go crazy into the news events, and Brexit was a great example of that. So, where are we going? Statistically, today was a 50-50 day. Monday is a little bit weaker day. So if you're following the stats, we could start out the week next week kind of slow, kind of weak. And then what I kind of think is that maybe the S&P needs a day or two to back and fill a little bit before it goes back up. As we did the opening print today, and if you read the opening print, I went back over the last 34 days of net changes, and I think the total net change over the last, 10 days is 5.9 handles. There's not that much going on here. And the down days, I think, they average -6 handles. So it's the same thing. The S&P is caught in this lockstep. And what I see is I just see the S&P sell off, go underneath the VWAP, see some buying come back in, and then bam, we go back up. And right now, the MIM just popped up to 440 million to buy. Listen, I'm going to leave it like that, you guys. I told you I would be back. I am back. I'm not fading you. You said that you wanted a video, maybe kind of just one or maybe two a week, and I'm going to do that, if not more. I want to remind everybody that we've got some big events coming up. We're doing an invest.com 3-session webinar. They're a company in Europe. And the first one's going to be me doing the history of the Chicago trading floors and how it all came about and where it's at today. We're going to hook up Brian Shepard on the trading floor. He's going to give us a rundown. If there's anybody down there that can give you a rundown on that, what's happening there, it's Brian. And then the second one we're going to do is Marlon Cobb's going to come in and start talking about the MEM, and we've got Dave Winkie going to come in and do some technicals, and I think that maybe top notch. And then last but not least, we're going to do a man versus machine and kind of update that whole concept. And then last but not least, we got the Pitbull coming back. The Pitbull's going to come to the cave, he and I, one-on-one, and we're going to talk about how this thing works right now. And I'll tell you what, I've always been honest about this. Not every trade I make is winning. I had a rough beginning of August. I started making a little bit of money this week, but I'm going to reiterate something. If this was easy, we'd all be millionaires. I'm going to leave it like that, and I'll see you on Monday on the closing print.